Good morning. Welcome to Goodwill Commodities. In this video presentation, we will see how we can trade in Mcx crude oil today. Before looking into that, let us see what happened yesterday and what we expected yesterday. The chart you are seeing is 7-minute candlestick chart for crude oil, and this candlestick indicates yesterday's price opening, which shows that the market opened here 3,120. We expected that you can go for a buying above 3,140 by placing a stop loss around 3,100. Only if the price is moving above that we can go for a buying. Though we know that the market was a bit weak on the buying side, unless until we get a trend confirmation, we don't want to go against the trend. Right after the price opening, the price continuously it came down, broke 3060, and it was a great drop, and the price came down till 3000 and closed near the same zone where it created a low. On looking at the chart, we could see that yesterday, though we didn't enter into a trade, we may assume that we have missed a big opportunity because yesterday we had a very big price action. That might be triggered based on the inventory report or everything, but we don't go into the details of the fundamental report. This is how the trade works. Sometimes we may think that after seeing the price action we would have missed the opportunity, but this is a trade discipline we follow. Once we get a confirmation, then we will enter into the trade, particularly when the trend is changing from buying to selling. So what we can do today, how we can position ourselves for today's trading. Today you can expect crude oil to open somewhere just near 3010 and 20. We know that if it was completely dominated by the sellers yesterday and the price closing near the key support zones, everything indicating the downside. Since the price had dropped a lot, out of panic we cannot rush into a trade since the price is near the psychological zone of 3000. What we need to do now, we need to calculate how much funds we have in your trading account. Whether we have sufficient funds in the trading account in order to support our stop loss zones. If you have sufficient fund, wait for the price to give a bounce back near 3040s or 50s. Pick the zone and then go for a selling. If you have very good fund and if you want to make use of the trend or if you want to rush into the market, right away you can go for selling and you can average till 3100. So this is going to be the stop loss zone for us, 3100. You can place a stop loss above 3100. You can go for selling, expecting the price can come down till 2960. I'm going to mark this 2960, which is going to be the next support and the target zone. But if you assume that it is going to be a 100-point averaging, if you go for a selling, so since it is going to be a 100-point averaging, go for a selling on the bounce back. That is the reason we are advising that wait for the price to climb a while and then you can go for selling so that your stop loss zone will be minimum. So coming to the first point, looking at the yesterday's price action, we may assume that the price we had missed an opportunity. It is not like that. Once the trend is established, it will go further beyond to break all the support. If the yesterday's price action is a confirmation of the downtrend, you can very well expect crude oil to break all the supports more than 200 points. So we need to be a bit patient to pick the right zone when the trend is changing. So that is the reason we didn't reverse our position in the yesterday's market. So let us see what's going to happen during the trading session, and thanks a lot for watching our videos. Happy trading. Take care. Bye.